Today, we are diving deep into the world of investments, breaking down three popular options: doing it yourself, multi-asset mutual funds, and Sphere PMS. If you're confused about which one is the right for you, you're in the right place. We'll be comparing these options across key factors like allocation limits, investor involvement, style, taxation, and more. By the end of this video, you'll have a clear understanding of each, empowering you to make an informed investment decision. So, first up, allocation limits. By doing it yourself, you have complete freedom, no limits. You decide where your money goes. Multi-asset funds operate with a mandate, meaning that the fund manager allocates based on predefined rules. Sphere offers a flexible mandate allowing for more dynamic allocation. Next, investor involvement. Doing it yourself requires high involvement. You're making the calls. Multi-asset funds and Sphere PMS requires low involvement. The fund manager does most of the heavy lifting for you. Investment style. Investment style reflects how your money is being managed. By doing it yourself, you choose the style. Multi-asset funds are managed by the fund manager, often with a diversified approach. Sphere's approach is more value-oriented and contrarian, focusing on undervalued assets. Next, rebalancing. Rebalancing is crucial to maintain a desired asset allocation. When you do it yourself, you decide when and how to rebalance, making it a risky venture. In multi-asset funds and Sphere PMS, the fund manager handles the rebalancing based on market volatility. Next, taxation. Taxation is a key consideration. When you do it yourself, you are taxed at every transaction. Each sale and each buy triggers potential taxes. Multi-asset funds typically leans towards equity taxation, but it can vary. Sphere is also taxed at the transaction level since it's a discretionary PMS. Exit loads. Exit loads are fees charged when you withdraw your investments. When you do it yourself, you will have exit loads depending on the specific funds you choose. Multi-asset funds may also have exit loads. Sphere stands out with no exit load, offering more flexibility for you. Next up, minimum investments. Now, minimum investments can vary when you're doing it yourself and when you're choosing to invest in multi-asset funds. They can be very low, amounting to even 5,000 rupees. Sphere, on the other hand, typically requires a higher minimum investment amount, often in the range of 50 lakhs. Next, adding more funds. Adding more funds is generally possible across all the three options. Management fees. Management fees represent the cost of managing your investments. When you're doing it yourself, you have a blended fees across the chosen funds. Multi-asset funds typically charge around 1.5%. Sphere also has a flat fee structure of 1.5% per annum. So, which option is right for you? If you want complete control and have the time for doing your own research, then doing it yourself is the better option. If you prefer professional management and diversification, multi-asset funds are worth considering. If you're looking for a specific investment style and have a higher risk appetite, then Sphere PMS is the option for you. Remember, it's crucial to align your investment choices with your financial goals, risk tolerance, and time horizon. Do your research and if needed, consult a financial advisor. If you found this video helpful, subscribe for more investment insights and hit the notification bell so you don't miss out on our future content.